Good morning, and once again, I welcome you to our morning session. We are doing taxation, advanced taxation, and we want to look at, we want to just collect from where we left. We are doing partnership and business income, but I'm seeing that rather than repeating the questions of partnerships and so on, it's very important for us to look at incomplete records, which also form part of the questions relating to partnership, so that we are not repeating the same sequence of questions. Also, I would want us to look at what is incomplete and what entails. I'll just be able to start by giving an example relating to the income taxes. I know very well that some of you are dealing with their clients, and you'll find that they are not maintaining their books of accounts in a monthly basis. But at the end of the period, they are going to be giving you the bank statement, for instance, the iTax passwords, to prepare the yearly income statements, and also to file the income tax. So in that regard, we normally come across the aspects of the assets and liabilities, and in that case, given some few notes from the owners of the business. So putting that into consideration, it means that the incomplete records entail the businesses which are not maintaining proper books of accounts. Therefore, you have to be preparing those books of accounts to determine what is required and how much is supposed to be paid by the revenue authority. Now, let me just elaborate it a bit. Incomplete records arises. They are normally arises. It arises where the taxpayer normally arises where the taxpayer does not maintain, the taxpayer does not maintain proper books of accounts. They don't maintain proper books of accounts, right? They don't maintain proper books of accounts, but have a summary of assets and liabilities. Normally have a list of the assets and the liabilities and the bank statements. Yes.
See, we did that again.
So, sorry?
We did that again.
We did this again.
Where you are covering about the debtors, the receivables, and even we did an example.
Which example?
Yes. We did August 2023 question 2A and May 2018 question 3A.
Oh, okay. If we did only 2 questions, let us do some few questions there relating to incomplete. Then we are done with it. So you have told me we have already done 2018. We've already done May 2018 question 3A. There is also a questions. I just need to do another 2 questions for better understanding of the incomplete record, and thank you for correction. So
Okay.
let me just pick from there. So previous class we said These incomplete records arises where the taxpayer will be able to, it does not maintain proper books of accounts, but have a summary of assets and liabilities in the bank statements. And we said only 2 accounts are required to be prepared here. We normally have debtors control account, debtors control account. Then we normally have creditors control account. These are the only 2 accounts which we normally prepare. This one to determine our credit sales, correct? Then this one, we want to look at our credit what? Credit purchases, right? Now, from there, I would like us to start by looking another question for a complete. Can we go to August 2023? The August 2023, there is a question there relating to the same. So that we
We
can.
have also done that.
Which question we have not done?
We have done August 2023, question 2A, and that for 2018.
Okay, so we have done August 2023. So we have not done December.
Yes.
Okay, now we can do December 2023. Question number 1B. December 2023. Question number 1B. Thank you so much. December 2023, question number 1B. Question number 1B. So we can pick from there. So let me just go to my questions and share with you. So December 2023 is here. So let's look on our questions. Question number 1B. So you can be able to read the question. You read? Joy?
Eileen.
Okay, okay. The question is on our screen.
It well.
You can see it?
Yes. Let me learn from my paper. But Asili and the trio established a partnership business, sharing profit and losses in the lease of Lee to 2 respectively. The following statement of profit and loss of the business for the year ended that 1st December 2022 was provided. Sales 20,084,000, then gain on the sale of shares, foreign exchange gain, they are unrealized, recovery from insurance on the stolen stock, discount received, dividend from Wakaguzi Cooperative Society, that was gross. Then we are given the total income. Expenses, we have purchases, purchase of computers, partner salaries, legal fees, repairs and maintenance, rent and lease, interest on loan, general expenses, motor vehicle expenses, insurance, preliminary expenses, directors' fees, audit fees, venture interest, traveling expenses, then we get the net loss. Additional information. Purchases and sales of goods were inclusive of value-added tax at the rate of 16%. Closing inventory was valued at shillings 5,520,000. When opening inventory was 10% of sales of net VAT. The partnership was converted into limited company by the name Asili Limited on 1st April 2022. Income and expenses accrued evenly throughout the year unless otherwise stated. Legal expenses, legal fees comprised notice for change of business name, conveyance fees of business premises, stamp duty, acquisition of business loan, recovery of bad debt, signing a 99-year lease agreement, purchase of Asili's private residence, appeal against tax assessment. Repairs and maintenance comprised purchase of furniture, installation of new sign, designing office block, painting of new office block. General expenses included registering of patents, negotiation for additional land for business expansion. Interest on loan includes interest on partners' capital of shillings 300,000, which was shared according to profit and loss sharing ratio. Required, prepare a statement of adjusted taxable profit or loss for the year ended at 1st December 2022 for Asili and to leave partnership business, Roman 2 Asili Limited Company, and Roman 3 Ashendu showing allocation of adjusted partnership profit and loss computed in B1 above partners.
Thank you so much. When you look on the question, you'll be able to find that is a question for partnership. I just want to revisit the question so that I can also be able to do another question. I think we did not do enough questions for partnership. I'm just revisiting it and then we move to another question. Now, in that case, we are saying that the examiner is telling you to prepare the adjusted profit and loss for the partnership and also for the Asili Limited. Then we come up with a schedule showing the allocation of adjusted partnership profit or loss computed in B1 above to the partners. And I said when you come across this kind of a question, it doesn't mean that you're going to be separating the two. No. Now, we normally start with our title. So let me do mine here. The first thing you do, you start with your title. So they are calling themselves Asili to live. They are called Asili to live and Asili Limited. Right, Asili Limited.
The one is not visible.
What is not visible?
Can't see on the board. It's enlarged.
Up to now?
No.
Sorry?
No.
Is it okay?
No.
And now,
Yes.
is it okay?
Yes.
Okay, so we have talked about Asili to Live and Asili Limited. We look at the period. We said the period is between 2022 adjusted taxable income to close computation. Okay, now after you write that, you're going to be dividing the period in which they were partnership and the period in which they are as a limited liability company. So we are being told they operated only 3 months as a partnership. So we talk about 3 months there. Then here we have 9 months. Okay. Now we're going to be having a clear shillings here, column. Another one here. We have another one here. Then we have another one there. So we are going to be starting with what? We normally start with our reported profits. So we start with reported profit here. So the reported profits, we go back to the question, right? The reported profit, I can be able to see it was a loss. So my reported loss is how much? My reported loss, right? So it looks like this. So our reported loss, we are being told it is 2689.6. We divide it by 12 times 3. So this one should be 672.4. What about when they were limited liability company? I say 2689.6 minus my answer. We are getting 2017.2. 2017.2. Then we are going to add disallowable expenses. We're going to be adding disallowable expenses. So to add our disallowable expense, we said we do what? We start with our additional information, right? So additional information number 1, we are being told very simple there, that the purchases and sales of goods were inclusive of the VAT, right? They were inclusive of the VAT at the rate of 16%. And this one takes back to our introductory topic where we talked about the understatement and overstatement of these items. And we said some, which, for example, the sales and the closing stock, they normally have a direct relationship with the profits, whereas the purchases and the opening stock, they have an inverse relationship. So when they are overstated in this case, they understate the reported what? The reported profit. That is what we were able to say. So in this case, they were able to overstate our purchases by 16%. That is what we are discussing here. So when you look on your purchases there, so we talk about overstated purchases. So in this case, because we are looking at that proportion which was overstated, in this case, it should be 16 over 116. We multiply it with what? 16 over 116, we multiply by the total number, the total purchases, which is 85.26. So it will be 16 over 116. 16 over 116. We multiply it with 85.26. We are getting 1176. Right? Then we are being told also the sales were overstated. So when they are overstating the sales, it means that the reported profit is overstated. And therefore, it means the VAT on the sales, the VAT on the sales should be deducted later on. Now, closing inventory was valued at 5.52, while the opening inventory was 10% of the net of sales. That information might be helping us later. Okay, so the partnership was converted, Sawa. Let us go to number 3 or number 5, sorry. where we are discussing the legal fees, which comprises of, we look on the disallowable expense we had back. Number one, we start with the notice for change of name, right? There is someone who was not able to tell me, here we are subdividing, so it will be 1176, but now we apportion, so we multiply by 3, we divide it by 12, getting to 94 here, whereas now 1176 minus my answer, we are getting here 882. 882 there. The notice for the change of the name, right? The notice for the change of the name, it is 194.4. We multiply by 3, divide by 12. We are getting 48.6. Whereas on the other side, it was how much? We say 194.4 minus my answer, getting 145.8. 145.8. Now, from there, we have the conveyance fees. The conveyance fees of the business premises. Now, it is 217.2 times 3 divided by, we divide by 12, getting 54.3. And these things, you can do the assumptions in the way you wish. So 217.2 minus my answer, we are getting 162.9. 162.9. We have stamp duty. The stamp duty, right? The stamp duty is charged 349.8 times 3 divided by 12. Yeah, here we are getting 87.45. Right, then we look at the difference, 349.8 minus my answer, getting to 62.35. 262.35. Now we have the acquisition of business loan. Acquisition of business loan. Right, we might be taking the loan, whether for the partnership. That is 62.4 times 3 divided by 12, 15.6 here. 15.6. Then the other one will be how much? 62.4 minus my answer, getting 46.8. Yeah. We have recovery of bad debts, right? Recovery of bad debts. Someone might be able to say, the bad debts which we are discussing, they were general. That is an assumption. You can do your assumption there, unless there is an additional information discussing about the same. So 135 times 3 divided by 12, getting 33.75. Then also we have 135 minus my answer, getting 101.25. From there, we go to the signing a 99-year lease agreement, which is an allowable expense. We have the purchase of Asili's private, right? We have been told it is a private residence amounting to 450. So 450, it relates to the Asili, or it should be the Asili, the partner. Right, but it is not stated. Let me see. Purchase of Asili's private residence of 450. Right. Now, let us look at the appeal against tax assessment. Appeal against tax. So in this case, someone might be able to say, this tax led to the company, or the tax assessments might be directed to the directors. So it can apply to both, or you can do your assumptions. 246 times 3 divided by 12, getting 61.5. Then the other one will be 246 minus answer. We are getting 184.5. 184.5. That is the appeal against tax assessments. Now, when you go to the repairs and maintenance, we talk about the purchase of furniture. Right, the purchase of furniture. So you also create 288 times 3 divided by 12. Here we are getting 72. Then on the other side, we are saying that it is 288 minus my answer, getting 216. That is the purchase of furniture. The other one, we have the installation of neon sign. The installation of neon sign. The installation of neon sign is how much? We have been given 180 times 3 divided by 12, getting 45. Yeah. Then the other one, we have 180 minus my answer now, getting 135. Then from there, we have designing office block. So in this case, you can say the office block, because the company is the one which is required by the company law or by the Companies Act to have a physical place, not the partnership. You can do an assumption that the design of the office block was relating to the company. So you can just come in and you put 1170. And also we have the painting of new office. Painting of new office. So the painting of new office also, you can direct it there. 67.2. 67.2, right? Now we have the general expenses, which are already given down there. The general expenses relate to registering a patent, right? Registering of patent rights of 336. This also you can give it to the company, 336, right? Then we have negotiating an additional land for business expansion, right? Business expansion. You can just be able to put for both. So let me talk about business expansion. You come here and you tell me now, under the business expansion, it might also, the partnership might be in a need to expand. So it can be 168 times 3 divided by 12, getting 42 here. Then on the other side, we have 168 minus answer, getting 126. Right? You can see how it is easy to do these questions based on the assumptions which exist. Now we are being told the interest on loan include the interest on partners capital. Now the interest on partners, we are being told of 300, which was shared interest on capital. The interest on capital, we have what? The interest on capital, you give them to the partners, right? Don't subdivide it. Don't subdivide it to the company. Now, once you finish up with the additional information, we go to the expenses already, which we have not yet tackled. We have the purchases. We have the purchase of computers, right? The purchase of comms. The purchase of computers, we are being told here, the purchase of the computers, I'm just putting the expense there. So it will be 540 times 3 divided by 12, getting 135. Now, 540 minus my answer, getting 405. I hope you are able to see there. Then we have partners' salaries. Partners' salaries. And I know you are the people who are doing the allocation. So the partners' salaries, we have 2160. You put it here. 2160. Then after the partner salaries, we go to the legal fees, the repairs and maintenance, rental rates, interest on loan. interest on loan, which is an allowable expense. Then we have the general expenses, motor vehicle insurance, preliminary, directors, auditors, the audit fees. We have debenture, the debenture interest, the debenture, look at preliminary expenses here. The preliminary expenses. So what it is? What is the preliminary expenses? Right. So in this case, unakuja hapa, you say this is around 788.4 times 3 divided by 12, getting 197.1. Then we have our preliminary of 788.4 minus my answer, getting 591.3. 591.3. Now, after that, you are done. We go to the less expenses. We talk about less allowable expenses. Or we talk about non-taxable incomes. Non-taxable incomes there, right? Now, on the, we can start with the capital allowances. Under the capital allowances, very simple. Under the capital allowances, what do we have? Now, we talk about, we just look on the assets which we have already returned the cost here. Now, we start with the office, purchase of furniture, right? It normally qualifies for WTA at the rate of 10%, the rate of 10%. So if I can do 72, the 10% of it, it will be 7.2. And this one will be 13.5. Even if you combine and you subdivide, that is what you're going to be getting. Installation of the neon sign also qualify for the WTA at the rate of 10, right? WTA at the rate of 10. This comes to 4.5. And this one is 117. 117 there. We have the design of the office block, right? The design of the office block, which is around the 67.2. Here you put for me 6.72. We have something like the business expansion. I have not seen any other purchase. We have the purchase of computers, which qualify for WTA at the rate of what? 25% at class 1, right? So 25%, a quarter of 135 is how much, right? So I say 135 divided by 4, we are getting 33.75. Then a quarter of 4.5 divided by 4, we are getting 101.25. 101.25. Then we have the VAT on sales. The VAT on sale, which now we take 16 over 116, we multiply it by what? What is the figure for our sales? I can see it is 2184. So it will be 16 divided by 116 times 2184, getting 2784. 2784 divided by 12 times 3. This one will be 696. Then 2784 minus my answer, we are getting 2088. 2088 there. 2088. Then we look on our non-taxable incomes. We start with the gain on sale of shares. Gain on sale of what? Sale of shares. You know where the shares are. The partnership, they don't have shares. Now, the sale of shares, they were able to get around 1056. 1056 there. The gain on sale of shares, 1056. We have the recovery of from insurance on stolen stock. We said that one is a taxable income. We have the discount received of 552, right? The discount received of 552, we know it is a taxable income. Then we have the dividends. We have the dividends from Wakuzi, right? Wakaguzi. So how much is this from Wakaguzi? The Wakaguzi's dividends, which are gross, we have been told it is 153. So I say 153 times 3 divided by 12. We have 38.25. Then with the total is the 153 minus my answer, getting 114. 114.75. 114.75. Now, once you are done with that, I know that those summations you can be able to do. We are going to be looking on the other incomes. We look on the other incomes, and the other incomes you're going to be looking on the side of the company, because whatever you are going here to get is the adjusted business income. The adjusted business incomes. And for the side of the partnership, the question will be able to end there. But now, when you look on the dividends of ours, you need just to give the proportion for the dividends for Wakaguzi. So you give it to the company, that is 38.25. 38.25. Now, the examiner is going to be asking you about the total taxable income here. So the total taxable income. So the total taxable income there, it will be after you do your computations here, right? All the way here, you add back that figure. You know very well these are negatives then. Okay. You know all of those are negatives. So after you add all of these, plus these, and then you deduct all of these and you fail. You fail to get, this should be 114, sorry. You fail to get a positive figure. If you add all of that and you fail on the side of the company now, if you fail to get a positive figure here, the total taxable income still becomes a loss. The adjusted business income still becomes a loss. Then it means the total taxable income of yours will be this income, will be that income, and then you provide a relief of 15%. That is the case. But if you are going to be getting a positive figure here, you add your other income, then you're going to be getting your total taxable income. I have said, if you are going to be doing your adjustment when you are doing the summations, then you fail, you get a negative figure here, right? Then it means a loss from another type of business cannot be offset by an income from another source, and therefore that is why you cannot be able to take the losses you subtract from the income from other sources. That is why we can't be able to combine them two. We cannot. So in that case, it is very important for you to understand that concept. So if you will be able to get a loss here, then it means the total taxable income of yours is 114.75. 114.75. The other thing that is being required there, it is the computation of the allocation schedule. And I know that I have done well in that area. You will just be able, from the question, do the allocation schedules. And when you look on the questions of the partnerships, they might be coming here, or they come in the partnership itself. But in the incomplete, they normally try to see whether you have the knowledge. You have the knowledge for partnership when you are handling your question relating to the incomplete records. Now, I want now to just tackle a small topic, a small question there, because I see the time is not on our side. So in this case, I just focus on the computations. There is a computation of a question of May 2017. That question I will just be leaving it at some point so that you can complete after I do the adjustments for you. May 2017, I think we did not do the question. Then I will give you some, I will be able to give you some assignment which you need to do.
So let me find the questions for the, let me see here, public finance. Public finance and taxation. Public finance and taxation, it was advanced. So let me see that. Advanced. Advanced. Let me show you how I normally do it. So this is how we normally do it. So advanced, public finance and taxation. (2017), it should be May. Don't know whether the question is there. The question it should be somewhere. The question is not uploaded. It is not uploaded here. Can I try a different question?
Yes.
Miss Iraday. Sorry?
Yes, yes.
The good questions which I'm trying to do here, they are not there during this period. So let me first give you an assignment.
The assignment should be I think we did those ones. What about under the partnership? You can try these May 2017. May 2017. May 2017. We have question number 3B. May 2017, question 3B, right? You can also go and try the question. I see that you are able to find some few questions there. We have November 2016. November 2016, we have question number 1B. Right, November 2016, we have question number 1B. Then the last question which I can give you, and I just want to see how you are tackling these questions. We have May 2017. May 2017, question number 5B. I don't know whether you are seeing where I'm writing. Okay, so you can be able to do the 3 questions. The May 2017 question 3B, November 2016 question 1B, and then we have May 2017 question number 5B, question number 5B. Question number 5B. So you can be able to do that. Oh, there is another one for November 2015. And these apply the knowledge which I have already shared there with you regarding to the losses. So November 2015, question 3 also discusses more about what we have discussed here. So you can be able to go through all that. If we did, leave it. If we did not do, practice it. You can practice. If we did, don't repeat. Just do your revisions. Now, when you are meeting to the next time, we are meeting next time. When we are meeting next time, we will be able to do insurance. It should be insurance and the taxation of insurance companies. Taxation of insurance companies, and I will be able to to expound and we complete with one class. We don't need 2 classes to do the taxation of the insurance companies. So that one I will just be able to do the questions. And for those who were able to sit for last semester's exam, you could be able to see there is an insurance which was in our exam. So we need to handle it with a lot of care, and I will be able to do so for better understanding. So because we cannot be able to introduce anything now and do something constructive, I would like to stop at that point. Then please don't fail to do the assignments. But tomorrow in the evening we will be able to do our insurance, and we make sure that we complete it. The insurance, we will do it tomorrow from 8 p.m. Any question?
No.
Okay, so you don't have a question.
We have a class in the evening.
Tomorrow in the evening, not today. Tomorrow in the evening. So have a blessed day there,
And see you in the evening. Thank you and bye-bye.
Good.